Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines on the show are: the Indian rupee ends the day flat but in the green, tracking gains in the equities and in the Asian currencies against the dollar. The European Central Bank cuts the benchmark interest rates to 0.15%, also cuts deposit rates to negative. The gold prices take a knock. And the easing tensions in Ukraine push the crude prices lower. The Brent slips to a 3-week lows in the intratrade. Well, welcome back. Our major discussion today will evolve around the agri-commodity prices that have been declining over the past few sessions. There have been rumors that the government may withdraw essential commodities from derivatives. This comes on the back of fallout of the NSCL scam, but the commodity markets regulator and the exchanges feel that it's just a rumor spread out by some traders. Let's discuss the whole thing with FMC Chairman Ramesh Abhishek. Also joining us is Pravin Dongre, who is from IPGA. Joining us on the show are Samir Shah, who's MD at NCDEX. We also have with us Vijay in the studios right here with us. Well, let's start with you, Pravin. First of all, what's your sense, the reason for the agriculture commodity prices under pressure? The futures exports have declined more than what the spot markets have been doing.
For three reasons. One is, of course, seasonal, the fact that we are harvesting our Rabi crop. Secondly is that there has been a large appreciation in the rupee from its low. I think the appreciation has been about 14 to 15%. And of course, global cues, globally also on good weather and good plantings, the global market, grain markets and oilseeds markets have corrected lower. But having said that, the Indian markets have gone even further lower, especially the futures. So these seem to be on the back of certain rumors that are doing the rounds.
Samir, what is your sense? I mean, have you seen the rumors impact the exchange volumes as well? Because they seem to have declined also against the sentiment that government might come out with something.
It's difficult to say whether it has had any impact on volumes because volumes go up and down on a day-to-day basis for a variety of factors. So it's difficult to pinpoint that. I can, however, certainly say that there is a certain sense of concern in the market based on some speculative rumors that have been floating around in the market and some media articles that have been going on in the market about on this topic. So I can certainly say that there is some concern in the market, but I can't say that it's affected volumes per se.
Mr. Abhishek, what is your sense on this? Because the market definitely seems to be slightly jittery on back of these rumors, and of course this is after what's happened with NSCL as well, and that has led to some prices seeing profit taking or declines in volumes.
As we have all known that future market was in the past blamed for inflation because the integration with the spot market was not very strong. In last couple of years, we have taken a very large number of steps to strengthen this integration and convergence. You have seen that the staggered delivery system, not allowing contracts in the lean season, action against cartels for acting in concert to violate the client level limits. All these very strong actions we have taken. This market is very much more transparent now. There are a lot of disclosures now. So no one has blamed, to my knowledge, in last 2 years that this market has actually led to any inflation. If you see the prices of commodities which are traded on futures, most of them actually come down a lot in last 1 or 2 years because of fundamentals. So I think this is something that can be seen from the data, from the statistics, and there is absolutely no truth in this kind of rumor that this market has been stopped. There is no truth in that.
All right, so no truth in the rumors that the new government may come down heavily or at all on the commodity derivative markets here. But Mr. Dongre, the rumors, would you say, are misplaced in any case to start with, because it was the BJP government in 2003 which actually launched the commodity space as well?
Well, exactly. I mean, it was the BJP government that allowed the launching of the futures. It was the BJP government which encouraged the development of this market. and the BJP government is now elected on a platform of reforms and promoting of business. So I think this is completely out of place. I think the government will continue to support trade, will continue to support industry, and I think they realize the importance of the futures market, and the association feels that the government will support it, and that these are just rumors being spread by certain group of people, especially originating from a certain state only. So I think they're completely out of place.
Well, the rumors are misplaced, and we have seen BJP actually being pro-commodity derivative market, as we have seen in the previous regime also. Vijay, what is your sense? I mean, as we were talking earlier in last couple of sessions also, that the prices actually have seen a decline even as the fundamentals have not been supportive.
You're right, Manisha. Sentiments have definitely been impacted by these rumors. There's no denying that fact. And I hope the clarification from the FMC authority will now calm nerves somewhat little. And I think over a period of time, you will see action returning back to the commodity markets, especially the agri-commodity sectors. I think what is also impacting the sentiments is the overhang of the El Nino, which is now being touted by various authorities as a probability ranging between 60 and 70%. So my guess is one can't really blame the entire decline in trader interest on these rumors alone. There is also the overhang of weather. But over a period of time, I would feel that good sense will prevail, and traders will realize that these rumors are just that, rumors. And I would be very surprised if by the end of this calendar year, traded turnover in agri-commodity on both MCX and NCDX does not rally by at least 25 to 30% from where we are now.
Fair point. So there are lots of confluence of factors here which seem to be impacting the prices. And Samir, would you say, or are you examining trade patterns, and do you see any unusual trend there when it comes to trading and volumes?
Manisha, we are constantly investigating activities in the marketplace, because that's our responsibility as the first level regulator, as has been delegated to us by the Forward Markets Commission. So we do that on a daily basis, and I can say that if you're talking of any specific commodities, I can answer for more specifically, but we don't see any untoward activity at the moment. There is a general bearishness in the agri commodity specifically that's been going on almost for the last 6 to 9 months, and more specifically in the last couple of months we have seen that bearishness. It has prevailed even in overseas markets. The S&P Commodities Index as well fell in May, and commodity prices across international exchanges and spot markets in India have been going through a bearish phase in the last couple of months, and a large part of that has been excellent monsoons in the last season, and that has created a record production and hence a records arrivals in the mandis. We feel that the market prices that are trading on exchanges today or on our exchange today reflect fundamental factors quite appropriately, and we aren't seeing any untoward activity right now.
Mr. Dongre, when you say that it is Rajasthan specific, it has been in the media there that you have seen rumors or bearish calls coming in from various these commodities. Why then hasn't any action been taken against these people in Rajasthan?
Well, one of the reasons that we are talking about this today is that we hope some sort of investigation is taken first. Investigation takes place first as to what is happening exactly, and is there a bear cartel in operation. The behavior of the exchange and the behavior of the prices show that there are vested interests behind this, and I think once there are some strong announcements in place, I think the markets will come back, start trading their supply-demand price evolved numbers, and I'm sure if the exchange will investigate further whether there is a concentrated build-up of short positions.
Fair point. Samir, this one is to you. As you said, there are no unusual patterns here, but Mr. Dongre really has a different point of view here. He says that Rajasthan perhaps is playing up stories here. Would you also say that this needs to be investigated?
Certainly, we've seen some media articles, and not just in Rajasthan. We've seen that in a few regional media. So, I would certainly urge the media organizations to behave responsibly and to cover it responsibly. I wouldn't pinpoint any specific media or a specific state. I have seen it in a few, newspapers as well. So it's not just one. So it needs to, the media industry needs to sort of demonstrate some responsible thoughtfulness in this entire thing, because this has a genuine effect on investor perception and thus market prices.
Well, bearish calls from Rajasthan is something to watch out for. Mr. Abhishek, this one is to you really. When Mr. Dongre is saying that there are bearish calls coming in from Rajasthan, and while Samir says that perhaps an investigation should happen, what's, as a regulator, is your take on this?
We have asked NCDX to look into these complaints and rumors and see whether there is any truth in it. So we expect them to have a report, give a report to us. But the MD of NCDX has told me that prima facie there doesn't appear to be any manipulation, but they will be looking into it and giving a report to the Commission soon.
Alright, so as of now it's only rumors, but the impact has been seen on the commodity market prices and volumes as well. This is what the market participants and the regulator have to say, that they would definitely be looking into if any cartel is really making this happen. But with that, let's go for a small break, but don't go away, because we will continue this discussion on the other side. Welcome back. Vijay, this is to you first. What do you see the impact coming in for the agro commodities now? Because yesterday, last few sessions really have been bad, but we seem to be consolidating for most of these agri commodities now. Where do you see an opportunity, and do you think we really have come out of the kind of bearishness that we were reeling under?
Manisha, I have been maintaining my view that most of these agri commodities are now nearing, if not already near or at their oversold levels on the short-term charts. That is borne out by the fact that you saw chana in the last one or two trading sessions bouncing higher from lower levels. You're seeing sugar showing signs of strength in the last two trading sessions. You're seeing edible oils which are now stabilizing and attempting to rally from here. So my guess is today's show will clarify a lot of doubts and bring back trader interest, and then fundamentals will start prevailing over prices. In which case, in the next 8 to 10 trading sessions, my guess is sugar, chana, wheat, edible oils will have stabilized either from somewhat lower levels or from the present levels themselves, and you will see upthrust coming back in the market. So for the month of June, if at all there is a downside risk, I would place it at 2–2.5%, whereas the upside potential, in my view, over July and August from the current levels is in excess of 5%.
Alright, so that's the view coming in for prices really, but before we go any ahead, let's ask our other guests also on what they are expecting now to come in for the commodity derivative markets from the new government. Mr. Abhishek, you go first. What are you awaiting from the exchanges first of all, in sense of new ideas or product innovation?
Well, for one, we have asked exchanges to introduce as many delivery-based forward contracts as they can, particularly in the contract which are very liquid in their exchange. And exchanges have told us that they are working on it and will be giving us a proposal soon. So that will be quite a good and positive step. We like to have forward futures both on our exchange platform, and that I think will be a very good innovation. We have also asked them to talk to the physical marketplace, which they do, but we want them to cater to the needs of the physical market in any way that they can. Of late, for example, one NCDX has taken the initiative of redesigning their contracts as per the needs of the physical market participants. Indian Sugar Manufacturers Association, they advised NCDX to have a particular type of contract which they submitted to us, and we have approved, because we thought that if that is what the physical market wants, then we definitely have no problem in that. So with this kind of alignment and convergence, we expect that there will be much more growth in the future market in the right direction.
Mr. Abhishek, that's about the exchanges, but what are your initial interactions that you have had with the new government, and what do you see as the next step forward coming in from them?
As we are aware, the regulatory framework of this market is very old, and this needs to be revised and strengthened. The FCR amendment bill was pending in Lok Sabha, which is now lapsed because of its dissolution. So the government will soon look at all these issues as to what kind of, how much strengthening, what kind of strengthening is required, and then they will take a call. So I expect that that will happen sometime in near future.
Pravin, the same question goes to you as well. What's your expectation on the new government that should be doing, especially as a pulses association?
Our plea to the government is that they should support the futures. They should allow this market to develop. They should increase volume and participants in this market. And more importantly, I think they should throw open the stock restrictions that happen in Chennai, in Rajasthan, which are completely misplaced. The states of Madhya Pradesh and neighboring state of Gujarat have no stock restrictions. Stock restrictions then do not allow the market prices to evolve naturally. There are restrictions in place, and I think more open the market, better the realization to the farmers, and the crops will continue to grow, because Chennai is the largest crop in the pulses basket, and hence it is the leader, and the government should support these crops, these farmers, throw open the exports, and more importantly, I think include it in the public distribution basket.
Well, those are the few things that the Pulses Association also is looking at from the government. But Sameer, you go next, and what's your expectation as an exchange now from the government or from this budget also?
See, futures market and spot market, although they, there is a link, one also needs to appreciate the difference between the two. Futures prices reflect an expectation in the future, whereas spot market activity reflects what is happening right now. So it could well be that the market expectations of the future are slightly different or slightly more, amplified as compared to what they see today. So in that sense, we need to ensure that we look at futures prices quite differently from the spot market. Although they do have a bearing on each other, but the indication from futures prices is for a price at a future point in time, and hence it needs to be viewed appropriately.
Alright, so that's the view coming in from our guests on the concerns that the markets are seeing right now in sense of price decries and volumes as well, but they say these are all misplaced rumors. The government actually may come out and give out some more benefits, or even FCRA may see a passage this time around with the new government there. But with that, guys, we'll let you go. Thank you so much, Mr. Dongre, Mr. Abhishek and Sameer as well for joining us with all of that conversation. With that, let's go for another break. When we come back, we will talk some more about NSEL, and of course, there has been an ECB interest rate cut. We will give you a reaction of that on commodities.